you. I'm your host, Effie Pilarinu, and today I have the pleasure to be connecting with Brussels directly and with a good friend and colleague, Dimitrios Psarrakis. Welcome, Dimitri.
Very happy for having me here with you, Effie.
Dimitri, we haven't seen each other in person for a very long time. I remember exactly when was the last time you visited Switzerland in your capacity as one of the really instrumental people at the EU level in terms of policy making in digital transformation, fintech, capital markets, and so on. Let me introduce you formally to our audience. You are currently the head of EU affairs at XReg Consulting. You'll tell us a little bit about what you do there. And I know that you've spent a big part of your career, I think, how many years? 6, 7 years?
7 years.
7 years at the European Parliament with a laser focus, capital markets, digital transformation, and fintech. You were next to Eva Kaili, who's now the Vice President of the European Parliament. And with that, tell us what you do first at XReg Consulting, and then we'll take a deep dive into all these hot topics around policies and regulations and where the EU is in terms of creating great conditions for an ecosystem here.
Thank you very much, Effie, for having me here with you. It's true, the last time we met was 3-4 years ago, in better times. But it seems that it pushed a lot to accelerate the technological transformation in Europe, all this COVID situation. Well, yes, I'm head of the EU affairs of XReg Consulting, a boutique consulting firm based in Gibraltar with presence in many places around the world, which specializes on the regulatory strategy of crypto firms, crypto-related companies. Issuers of tokens, exchanges, e-wallet providers, and so on and so forth. And through 8 years ago, I started my career in the European Union with Eva Kaili, working especially on the field of fintech, digital finance. We worked together to the introduction on the blockchain resolution, which back then in 2017 was a bad word to mention. But I think that we set a framework for all the regulatory initiatives we see right now in the European Union, creating a lot of headlines in the space of crypto assets. We have the markets of crypto assets regulation, we have the transfer of funds regulation, we have an upcoming directive on the taxing of crypto assets. So yes, a lot of things happening right now in Brussels.
And now that you mentioned this, I think that when we were together, you had come here to Zurich, to Switzerland, to talk about that blockchain resolution. It was like just hot, just coming out, and there was a lot of interest to see, because obviously it was the first framework that was addressing this issue. So tell us about what are the big regulations here. I know about MICA, what's under MICA, and what else is important.
Mm-hmm. Well, contrary to what we suggested to this blockchain resolution, unfortunately, European Union adopted an approach which is more or less what the regulators felt comfortable to follow. In our blockchain resolution, we asked for a regulatory framework for tokens in general, an approach that we saw followed by Liechtenstein. At least somebody followed our advice. But yeah, the European Union adopted a very, let's say, lazy approach when it comes to tokens that look like securities. the existing financial markets regulations apply, namely MiFID. But when it comes to other types of tokens, we have a brand new regulation. We call it Markets in Crypto Assets Regulation. And this framework deals with the utility tokens, tokens that are not payment tokens and they are not security tokens. And we have also payment tokens. We have two major categories. The one is asset reference tokens, which is what we more or less call stable coins. And the value of these tokens derives of their denomination on specific commodities or other securities or assets or a basket of currencies. And we have
does that include, Dimitri, like any asset backed, meaning, you know, it can be an art portfolio, an investment portfolio, a real estate portfolio, or not?
It can be, the regulation is very open on this. You can have an underlying asset and the security and the price of the token derives of this asset reference token.
Yeah.
They don't specify the asset. It can be everything. And we have the e-money tokens,
right,
which is a family of tokens denominated to a specific fiat currency, US dollar, euro, and so on and so forth. So
but could be also commodities, right? Gold.
No, this is e-money token. It's only
e-money.
about one currency, not even a basket of currencies.
Okay.
So if you want to have a token which is denominated in dollars, US dollars, this is a US dollars token. It's an e-money token. And we have also a subcategory for tokens that have really big volumes and may have some sort of systemic impact or may distort a little bit the transmission mechanism and the monetary policy of the union. We have a special category. We call it significant asset reference tokens or significant e-money tokens. This is the one framework that you see in MICA. The second major framework is about the companies that deal with cryptocurrencies, the VASPs in the terminology of FATF, CASPs in the terminology of the European Union, crypto asset service providers. And this includes the ones who provide custody of crypto assets, the ones who engage in trading of crypto assets, the ones that provide services of advising on investments of crypto assets.
Yeah.
And so
the brokers, I imagine, are under that category too.
Yes.
Yeah.
These are CASPs.
Yeah.
They are CASPs under MICA, and if they provide financial services, they have to have a MiFID license.
Dimitri, the previous category that you mentioned of the what you call them systemic, you said, or the significant ones. What exactly does the framework have in mind there? Are we talking about, you know, the potential Libra DM token or some protocol token that could scale? What falls under the category? An example?
Well, the regulation identifies a catalog of thresholds. So if you have a client base more than 10 million people, or the capitalization of your token is more than 5 billion, or the daily volume of transactions is more than 2.5 million people, or a value of transactions, daily value of transactions is more than 500 million. These are thresholds that may qualify you as a significant token.
Okay.
In this case, you have one extra layer of
regulation.
And first of all, the opinion of the European Central Bank is mandatory.
Okay.
And also you have to have a license and a permission. Now, it's not clear if it's going to be ESMA or EBA. It's something that they are going to decide in these days during the trialogues. but you will have one more layer of regulation. And the interesting thing is that the European Parliament included this same concept of significant entities also for the CASPs. It's not in the original text of the Commission or in the text of the Council. The European Parliament introduced the idea of significant CASPs, meaning exchanges that are disproportionately big.
Yeah.
They should have an extra layer of regulation from the side of ESMA. The interesting thing here is that what qualifies an exchange or an crypto asset service provider as significant is not clarified yet in the regulation. It's going to be decided by ESMA in the level 2 regulation afterwards. Still, we are negotiating with the member states if they want to have something like that in MICA.
Very interesting. I mean, when you spoke about significant, token or digital asset, I was thinking, the Binance token, and then, when you said about, a big exchange, obviously Binance is a huge exchange, and given the recent permission that they got from France to be their first EU country where they're regulated, I guess this will bring a good real example to test, if you want, to whether the EU wants this or
is
not.
True. And being in a major regulatory space like France or Germany gives you, if you are a big player, gives you the opportunity to of godfathering the regime of MICA that will follow. If you are in a small jurisdiction, it's not as easy to go further.
Now that you mentioned godfathering and the big jurisdictions and so on, where are we at in terms of the status of these regulations, in terms of getting feedback and comments from the industry? How are the relationship with the industry? What stage are we at?
Well, obviously, when you introduce a regulatory framework, two effects come in place. The first is happiness, because your business model and your instrument finally will have some sort of regulatory and legal certainty, which always is helpful to make your business flourish. This is the one side. On the other side, you want to see how much of your business model, profitability model, and operational model will survive the new regulatory framework. So on the one hand, you like it. On the other hand, you don't like it. And as you can imagine, when a regulatory framework is in the process of design, everybody wants to influence it. And when you don't know necessarily how to influence it in the most optimal way, you become anxious, you become noisy, and this may lead to not very good relationship with a regulator. We experienced this kind of moments in the last month in the final stage of negotiations for MICA, and also in the final stage of the negotiations of the transfer of funds regulation.
Dimitri, and I'm not a specialist, the part of the regulation around non-custodial wallets that was not met with with any type of a smile or was not really welcomed by the industry. Does that fall under MICA?
No, well, MICA is the regulation that deals with the instruments and the service providers. Okay. The transfer of funds regulation deals with the anti-money laundering provisions. So this story you mentioned about the unhosted wallets is the story of the transfer of funds regulation. What made MICA famous the previous weeks is this famous provisions about potential banning of the proof of work that could
the mining industry. the mining
And the
industry.
Bitcoin itself and the holders of Bitcoin, because what was specified in this amendment that didn't survive is that if a token is a product of a proof of work, should not be admitted for trading in the European exchanges. This could have a significant impact.
Severe effects and ripple effects.
Mhm.
I must say. So if we look at the entire picture,
Mhm.
what are the elements that we can talk about as for favorable conditions in the EU from these policies? I mean, in general, I always think of the EU as being very progressive in the regulations in fintech, right? And crypto, for me, falls under the broader or the next generation of fintech. You know, when I think of PSD2, the classic example, obviously, Europe, the EU gets the credit for that. So where are we at? What favorable conditions have we created? Have you created at the policy level that are really promoting the ecosystem and growing the ecosystem in Europe?
This answer have two dimensions. One is the dimension of digital finance in general, and one is crypto in particular, because the ideas we have in the one field do not necessarily trickle down to the specific regulations. What I mean is this. You mentioned very correctly the PSD2, Payment Service Directive 2, where we effectively moved from the financial financial services regime we had in the European Union to open banking regime. This was a very strong move forward. And the digital finance package introduced by the European Commission in 2019 makes a step forward. Based on the experience of the open banking, we have to move a step forward to the regime of the open finance, which is not just providing information for payment services. If I want to use a fintech to carry out payments, I just need to give order to my bank to share this data with the fintech of my choice. Imagine this expanding to other financial products, investment products, insurances,
mortgages,
everything. So this opens the game, opens the opportunities for the fintech startups and scale-ups, and this is a very big move from the side of the European Union.
And for banks, right? Because if a bank doesn't have all that menu, if you want, of services through open finance, it could add and have a platform or marketplace type of approach.
Yeah, if you are an asset manager, also you need to provide information. So it's not about banks anymore. It's about everybody. If you are insurance, which is a huge industry in Europe, you suddenly need to provide to insurtech companies very precious data, and not everybody is very happy for that. So the implementation of this idea in the actual regulation, how you share data, how you, what kind of quality of data you provide, and what are the mechanisms, and what is the cost of engaging an insurtech or an investech or fintech in general, is something that has to be determined in the near future. And of course, we discussed that European Parliament at least had a very liberal view on how to deal with crypto. And then we had DG FISMA stepping in, making it a little bit more difficult. And now we are in the negotiations, and the European Parliament, through few members, made disproportional noise. and also the council. So yes, the idea is to have an open market. We have actually these principles, the technology neutrality principle.
Yeah.
We should not discriminate in favor of one technology over another. And this principle is a target that we always strive to get, but we never reach.
Right.
And unfortunately, another section we had in the blockchain resolution was that technology neutrality is not enough if it's not accompanied with a business model neutrality. Meaning that if you have a more innovative business model which does not replicate the existing business models over there, you should not be penalized. And we experienced the tension of this business model neutrality in another file that didn't concentrate much attention in the previous months, the DLT Pilot regime, where MICA is about the crypto assets.
Yeah.
The DLT Pilot regime is about the soul of blockchain, because in order to carry out a financial transaction, you have three layers. You have the trading, the clearing, and the settlement. And you have three different bodies doing this job.
In the traditional market.
In the traditional market,
yeah.
yes,
Yeah.
which is something very sensible to do in order to guarantee market integrity. But with blockchain, you don't need clearing houses anymore.
Yeah.
And you have 27, 28 clearing houses in Europe. And clearing of transactions is like taxation for the member states. It's a matter of national pride. And suddenly you remove them out of the picture.
Yeah. Yeah.
So yeah, business model neutrality is also very important. So,
but is there a question whether there should be some type of regulation at the protocol layer of the DLT, the blockchain, be it permissionless or permissioned? Because that is no.
Because we never regulate the technology. We regulate the instruments of the technology, the outcome of the technology. And we have this rule of same risk, same regulation. That unfortunately, in the case of the anti-money laundering regulation we have right now in the European Parliament, the transfer of funds regulation, this was not necessarily followed in the way we had it in our minds in the first place.
Understand. So how does this translate in the competitive landscape? I mean, you already gave some specific examples of tensions in the marketplace, and obviously the regulators have to deal with growing the competitive landscape, or allowing it rather to grow. And here we have, I mean, amazing growth if we look at the funding and the building that is going on in the digital asset space. It's just amazing, despite a market that is not favorable. I mean, prices are not booming. We are in a building period. So where are we at in terms of supporting this competition that comes from, let's call it DeFi, and it might be narrow, but blockchain for finance and everything that opens it up, right? DeFi is a very big part of it, but there's other things that are going on too.
Well, you may remember in 2017 when we introduced the blockchain resolution, I think that the last article of this resolution was that we were asking the European Commission to introduce a regulatory framework that will make European Union the best place in the world to do blockchain applications. So, and back then, 2017, the geopolitical environment was not as intense as it is today. And now with the geopolitical uncertainty, we have the eastern side of Europe and the growing competition from the side of China, and the inertia from the side of the United States. gives a fantastic window of opportunity for Europe to realize the competitive advantage that comes from the regulatory framework we create earlier than other major jurisdictions. The question in the beginning was how to make European Union the best ecosystem for fintech applications and blockchain applications in particular. Now, I remember I had a private conversation with a colleague from the council. My anxiety was to tell him, okay, it's not about making Europe the best place in the world. Just make sure that you would not create a village of Asterix, that everybody else around Europe has its own regulatory framework, norms, and practices, and European Union its own, and this could make the life for the startups and the innovation ecosystem in Europe really difficult. And one very clear example is, again, on the anti-money laundering provisions we introduced in the European Union. European Union wants to have strong provisions on anti-money laundering. I respect it, and this is the correct thing to do. However, when everybody else is allowed to carry out transactions in crypto assets without the responsibility to have know your customer provisions for payments less than $1,000, and Europe has no threshold at all, and you need to know your customer from the first euro, this is a strong disadvantage.
It is.
And it's also backward looking, because it's not on the direction that the European Union has decided to follow a few years ago. I mean, even if you use your fiat money and you get to a taxi to go from your house to your work, you don't need to disclose personal information to the taxi driver. He drives you. It is 10 euros. You pay 10 euros. This is it. Now
you're talking paying cash.
Yeah, paying cash. But the concept of technological neutrality should hold in crypto assets as well. So if I have a wallet and I want to make my payment in crypto, and suddenly I have to disclose significant information about myself. This is backward looking, because in general, the future of payments is not what Libra had in its mind. It's the merge between the tokenization of value and digital identities. And the digital identities are disposable. You don't need to disclose more information about yourself than what is necessary to disclose to carry out the transaction. This is the general view of the European Union, but unfortunately, we don't see it reflected in the position of the Council and in the position of the European Parliament at this stage.
Yes, and it's clearly extremely important to preserve the notion of cash, even in a world that is completely digital. We need to have that way, like cash, to be able to do transactions. And it's exactly what you said, that there needs to be a threshold where we don't need to disclose our identity, whether I want to give a gift to my godchild or whatever I want to do, buy some flowers and do it in a way that is completely anonymous, right? This is clear, and this is actually something that has been very well done with the design of the digital yuan, that they have thought of also people that are not digitally capable, how to go about it, and also to have a substitute for cash. And I think with CBDCs, any design should be, taking this into account. So where would CBDCs fall under the categorization that we spoke earlier?
Thank you for asking this. CBDCs are excluded from the scope of the regulation because it's a product of a central bank. It's
Okay.
not a private issuer.
Okay.
So it's about to have completely different frameworks. Of course, we have significant debates in the European Union right now about the design of the digital euro.
Yeah.
It's already in the agenda to have a digital euro, but how this digital euro is going to be transmitted to our wallets? How is it going to be programmable or not? What are the privacy concerns we should have about this? Because again, you may be a privacy fundamentalist, or and in the end of the day, how much data, how big should be the data server to accumulate data of every small transaction 500 million people are doing? I mean, in the end of the day, even if somebody locates this data somewhere, there is very little capacity to manage this data. On the other side, the problem is that if you have a concentration of data about transactions and you have a breach of data, these data are lost and are going to the hands of entities you don't necessarily want to have. So this concentration risk is of high concern for many people. And I don't know how the European Central Bank is going to deal with these challenges. We are expecting to see the final architecture soon, hopefully. Also, I'm really curious to see what is the role of the traditional banking system in the transmission mechanism, because effectively you can design the CBDC in such a way that you solve the fundamental problem of the too big to fail.
Yes.
Imagine if it's not necessary, the transmission mechanism, to go through a bank account and go directly from the central bank to your wallet.
Yes, but then the role of the commercial banks is going to be in providing the other services, lending, investing, advising, insurance, and so on, but not the processing of payment transactions.
Well, the main tool that the central banker has in his disposal is the influence over the interest rate.
Yeah.
If you can program the interest rate in the token, you don't need open market operations.
Correct. Yes, but that doesn't necessarily diminish the role of the commercial banks.
No, you can design it in such a way that in order to transmit the token, it has to be through a bank, but you don't need the bank then in order to carry out your transmission mechanism.
It will be interesting to see what is decided, because obviously every central bank digital currency has a different purpose and therefore design. Is the mission, which in Europe obviously is not financial inclusion like elsewhere in emerging markets or even in China. What is the mission here? How does the central bank see this?
I don't know how the central bank sees this, but I know that the existing financial system, banking system in Europe, leaves the 1/5 of the Europeans unbankable. And of course, it is within the regulatory regime of banking in Europe mandatory for banks to provide banking services. But for some reason, the 1/5 of the Europeans do not have access.
And not only that, Dimitri, I was coincidentally looking at data this morning about what percentage of European banks per country have already adopted the fast payment system, right? And the percentages are not that impressive. I mean, there's very few countries that are above, let's say, 70 or 80%, and many, many countries that are around 30% and so on. I'm saying that because instant payments, real-time payments are part, it's an earlier step of this digitization and serving better and faster and so on, and with the many countries that we have. And I was, there isn't that willingness there, or there's other reasons too that this hasn't happened. Dimitri, we could be talking for a while. I want to, before we close, ask you if you could give us a glimpse, a more global glimpse, where we are, look in terms of the EU policy regulations and its effectiveness or its ability to provide these advantages and create a great ecosystem here in Europe versus other countries or regions, if you want.
Well, I'm European. I'm a little bit biased. I want to say that Europe is well ahead of China, which has its own approach that reflects the political regime of this country. And it is also well ahead of the United States, that for some reason delays the introduction of a regulatory regime that could make sense in their country. And because, of course, of the way my friend Gary Gensler manages his role as chairman of SEC, he leads by creating sanctions to the entities. Is not the most welcoming environment for an innovative firm to be established in the United States. And you have in the periphery smaller jurisdictions in the Caribbean, in Middle East, in Far East, that they exploit their size in order to create vibrant and more agile regulatory regimes. I think that...
Please don't forget about Switzerland as we are speaking, right? Not part of the EU.
Of course. I forgot that Switzerland is not part of the European Union.
I know.
But in general, I think that the technology moves much faster than the regulators. We don't have provisions about decentralized finance. We don't have clear understanding of how innovative tokens should be regulated, like, for example, non-fungible tokens.
Oh, I was going to ask you about NFT.
And the current regulatory framework introduced by the European Union speaks nothing about decentralized autonomous organizations and decentralized finance. It depends on who you ask if they address non-fungible tokens. Well, if you ask me, based on the texts I know from the side of the Council, the Parliament, and of course the European Commission, the non-fungible tokens that are not hybrid, they do not work as securities. They do not need to issue a white paper under MICA regulation. And as long as they are not traded openly in exchanges, they do not, they are not subject to MICA.
Okay.
Of course, the noise that NFTs have created in the last year is a matter of a vibrant conversation in the country right now. I got the review of the first trilogues meeting on MICA. They still trying to figure out if to which extent NFTs are within the scope of this regulation. But from the text I know so far, NFTs do not fall under the scope of MICA if they are not traded in an exchange.
In an exchange, but on the usual marketplaces that are comparable to an eBay or whatever, right? That's the thing.
Fungibility is a fundamental criterion, okay?
Of course.
And if it's by definition non-fungible,
yeah,
then which financial regulation applies?
Yeah, it's extremely, and of course then the big question and interest is the taxation that as a consequence has the right treatment. And as you mentioned, DAOs is another booming important subvertical of the blockchain that right now may be innocent, but once we start seeing more investment focused DAOs, for example, then I'm sure the eyebrows of the regulators will have to.
MICA is a replica of MiFID, and MiFID speaks about centralized entities. Yeah. But if you are located somewhere in Europe and you have a decentralized protocol, but a concentration of liability in a specific entity in the member state, then you are under MICA.
You are under MICA.
But if you are...
so does that mean, Dimitri, if we imagine a protocol that is headquartered in an EU country and has a treasury of, I don't know how many.
You're a fundamentalist of decentralization. You don't know what it means to be headquartered somewhere. If you are not sufficiently centralized, you are not under MICA. But if you are a traditional and fundamentalist, you have a traditionalist, a fundamentalist view of what is a decentralized finance application or decentralized organization, then the very idea of being an entity somewhere means nothing to you. So you cannot be regulated.
Yes, but you know, we have seen what Wyoming has done with DAOs and made them a special case.
If I may say, they did nothing. Do you know why? Because you have a regulatory approach of people that their heart is in the correct side, but who is going to trust to go and create a limited liability company DAO in the United States that SEC has absolute remit to come and get you? It's also the place that provides. So effectively, you don't want to have a limited liability company and Gary to come and grab you at any case.
So the only place that is left is Switzerland again.
The only place, no, Switzerland gradually becomes more and more part of the global system. And we experienced recently in the Russian-Ukrainian crisis.
Yes.
That Switzerland wanted to show to everybody that participates in the sanctions. This could be impossible 2 years ago.
100%. Yeah. First big move of getting rid of neutrality.
Yep.
Before we close, Dimitri, it seems to me from what we said that the dream of harmonized regulation is extreme, or policies remains very, very difficult. And we are dealing with these technologies that are global innovations in business models and so on. How hopeful are you that at the EU level we can get something that shows the world that it can be done?
Well, we have regulation, not directive. This brings harmonization in the front, not coordination. So we are going to have a global frame, a coherent, harmonized framework for everybody. So this helps a lot because this comes with a passporting regime. You don't need to be in 27 different member states in order to be eligible to provide your services and products. So maybe it's not the ideal regulation. In the end of the day, there is no such
There's
thing
no
as an
such
ideal
thing.
regulation, but
Yeah.
it's a regulation that gives to a serious company access to 500 million people, 400 million people. By itself, this is something very important. And the moment that we put in motion what specialists call the Brussels effect, the tendency of other jurisdictions replicating the regulations of the European Union, this could create a framework that at least everybody speaks the same language.
And not only that, Dimitri, what happens also is even in markets where they haven't copied the same regulation, the market participants try to live up to the standards that are set here as good practices, as best practices.
The Brussels effect.
And that is called the Brussels effect. I didn't know that. I mean, and in open banking, we have seen that, right? I mean, here I say the open banking with a capital and the open banking with a small o. It's like what the market does in the regulation. And we've seen that in the US, they picked it up and practiced it in the market, right?
GDPR, the data standards of GDPR became a global frenzy. With zero marketing from the side of the European Union.
Yeah. So, I'm not sure that the GDPR, in my personal opinion, is the biggest success story. But for PSD2, open banking, and what is happening today in Europe, let's hope that can be the triple success. Dimitri, thank you so much for your time and insights. And I will share with our audience your links so they can follow your work and your voice.
Thank you very much, Effie. At your disposal and the availability of your audience whenever you have questions about the regulations of the Union.